This is the VIX EQ VIX ratio. And this is the best way to explain this is it's the volatility of the S&P 500 versus the volatility of the S&P 490, excluding the 10, the Mag 7, and the other names that are mostly propping this market up. And when you look at it in TOS, actually, and you can also view this a little bit different way in using a compare. So I'm comparing VXEQ to VIX. And you can see that there has never been as wide of a spread between these two in history. Actually, there's never been a larger spread. What is really interesting about the times that we have been up into this area previously, it was right on June 1st. And we were talking a little bit about this earlier today, is that this was the moment here where we had gone into the end of the week. And this was on the 29th, 1st, 2nd, looks like 3rd, 4th, 5th. So let me just go back to, I need to look at a calendar here really quickly. And it looks like Monday was the 1st. So it was Friday the 29th that we were sitting up inside of that high. And then that week is on the S&P so far, it's been the high of the year for the ES as well too. And one of the things that we were watching for on the ES is that previous high that we were inside of was also the beginning of a brand new futures contract. It was also the Monday after the Warsh's very first FOMC. And I feel like this is happening like in slow motion here. When we look at that spread, when we look at the divergence between the 10 and the 490 being the largest it's ever been, and then having a lot of these tech names, semiconductors, 30% off of their highs, you can see where even the flights to safety have broken down in terms of the Dow, specifically the flight to quality. And you start asking a question about what is propping up this market. Well, it's the VIX defending its little tight series of measured moves, and the ES defending its little tight series of long setups. And all the rest of the markets have broken down and have changed. When we go back to this VIX EQ, and this is the weekly chart, I'm going to start zooming in. There's a daily. And so we've spent, 1, 2, 3, 4, 5, 6, 7, 8, 9 days above this level. And it's essentially enough time for Wall Street to get it if they would like to understand it. And where is the line in the sand for everything kind of falling apart? I hate to say it like this, but it's kind of it wouldn't necessarily be a surprise to anyone paying attention, but it is the 1865 up here, and that's all we know about the new August contract. By the way, we get a brand new August contract as we're going into the beginning of next week. The July contract will expire. So in theory, this stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.